What's up, people? Welcome back to Industry Clause. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So Bitcoin Spot ETFs are finally here, and with Bitcoin dropping nearly instantly post-approval, the question is, why should you care? To answer that, let's go back to May 2022. Bitcoin was trading for right around $30,000 and dropping fast, on its way down to eventually reaching its low point of this cycle at $15,000 in November of 2022. As Bitcoin was crashing, I dropped this video here, the case for the $1 million Bitcoin. $1 million. That sounds crazy, right? In hindsight, it was probably poor timing, and when you add to that the fact that the channel was significantly smaller, it only got 37 views, which it is what it is at that point, right? But poor timing or not, it doesn't change the fact that a few things stand out when I recently watched that video back. Number one, I told you that markets are able to thrive in tight financial conditions. Interest rates peaked last year, and the stock market had one of its best years ever, right? And number two, I told you this. Take a listen. Institutional investors like BlackRock or Fidelity allocating 2.55% of assets under management would add $196K. That, of course, was in reference to adding $196,000 to the price of Bitcoin. Now, fast forward to this year on January 11th, and not just one or two ETFs were approved, but 11 of them were approved, right? So that's including Fidelity and BlackRock, the largest asset allocator in the world, as well as Ark Invest, who is behind the original $1 million price target for Bitcoin by 2030. So in today's video, I thought that it would be worth revisiting what it would take for us to reach that crazy number of $1 million per Bitcoin. And I'll close with a couple of alternatives investment ideas to capture the upside to Bitcoin that is coming, even if you don't want to buy Bitcoin directly. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show support to the channel and help it grow if you appreciate the content. All right, let's get into it. So for years, Bitcoin believers have been saying institutions are coming, and anyone paying attention would have seen the signs that led us here. To give you a few examples to illustrate my point, Microsoft started accepting Bitcoin payments for its in-game digital assets as early as 2014. Whole Foods joined in May of 2019, letting you buy groceries with Bitcoin. Starbucks started offering Bitcoin payment options in March of 2020. Home Depot became one of the many large corporations who embraced crypto and Bitcoin around the same time. Visa and every other major credit card company between 2020 and 2021 all partnered in some way, shape, or form with crypto native companies and issued credit cards that offered crypto rewards or debit cards that allowed consumers to spend their crypto anywhere Visa and the issuers were accepted. And that list I just went through doesn't even begin to scratch the surface of how crypto, Bitcoin, and blockchain is steadily but surely being integrated into our financial system. Now, while Bitcoin was at its lowest at the heart of the bear market in 2022, major institutions positioned themselves to be ready to serve the growing demand for Bitcoin and crypto. You can see on the screen here when BlackRock, BNY Mellon, Fidelity, and Eaglebrook, just to name a few, pushed deeper into setting up their infrastructure. The point is, those institutions are now here. The ETFs collectively pulled in a record $14 billion in trading volume in the first 5 days. That's insane. Bitcoin is recognized as a commodity by the SEC, and no other commodity ETF to date in history has had a more successful launch ever again, period. Keep in mind that Bitcoin is still an emerging asset class, but the interest for it outstrips everything else that falls in the commodity category. That's what I mean when I say that this is insane, okay? The reason this matters and why I wanted to first paint this picture for you is simple. Institutional adoption is a key piece of the puzzle for Bitcoin to reach the $1 million milestone. So now let's get to the fun part of this video. Ark Invest, every year since this decade started, has released and updated their model and price prediction for Bitcoin. You can see here that they have a bear case, a base case, and a bull case that assumes that everything went perfectly right. The bull case number has moved up since 2020 and now basically sits at $1.5 million per Bitcoin. I know, listen, I get it. It's crazy, but we'll get through this and you'll understand why we can get there, right? We have 8 categories that play into this valuation. From the bottom to the top, we have digital gold. Basically, this assumes that Bitcoin is used as a store of value, similar to gold. This is currently the most widely accepted use case and why it's in every model. Then we have institutional investment. This is our ETFs. Seizure-resistant assets. This is for high net worth individuals, essentially millionaires and billionaires out there trying to protect some of their net worth by putting it into Bitcoin. Can't seize their Bitcoin if you don't have their seed phrase, so it makes sense. Settlement network, the Bitcoin Lightning Network, plays into this with e-commerce. Emerging market currencies, think El Salvador and any other nation adopting Bitcoin as its currency. Nation state treasury, again, think El Salvador and future countries following into their footsteps. Remittance assets, this would essentially be taking market share away from a service like Western Union. The low fees and near instant transaction on the Bitcoin network is a clear benefit here over third-party services like Western Union. And finally, corporate treasury. Think about any company doing what Tesla, MicroStrategy, and a few others have done by replacing cash on their balance sheet with Bitcoin to protect against inflation or currency debasement. Now, as you look at this chart, there are 2 main takeaways that I want you to pay attention to. Number 1, the bear case. This assumes that Bitcoin only captures 20% of the total gold market cap as people diversify to this new emerging asset class, and institutional investors fail to onboard their client in a meaningful way, meaning that only 1% of their TAM or total asset under management gets allocated to Bitcoin through these ETFs or direct purchase of the token. Even in that poor of a scenario, Bitcoin is expected to still achieve just over 6 times the returns from current level and reach $258,000 by 2030, okay? Number 2, it's not unreasonable at all to expect that emerging market, where a vast portion of the population is unbanked and inflation is high, will continue to adopt Bitcoin over time, reaching up to the 10% allocation rate or even higher. It's also not unreasonable to expect that institutional grade investors will allocate 5 to 6% of their client portfolio to Bitcoin as part of a diversified portfolio strategy. I would say that it's also not unthinkable and unreasonable that high net worth individuals will put 5% of their net worth into Bitcoin as a safety measure. As a matter of fact, many are already doing this. And ultimately, it's not unthinkable to expect for the younger generation, so that's Gen Z and millennials, that they will prefer Bitcoin over gold as an investment store of value to hold in their retirement funds. Point in case, Fidelity already offers this as a benefit, so that 40% market cap is more than plausible by 2030. When you combine those 4 elements, and that's my punchline when it comes to the second key takeaway here, the path to $1 million per coin becomes less outlandish and quite a bit clearer. One thing to remember is that we will never have more than 21 million Bitcoin tokens. And so when you consider that we have a little over 330 million people in the United States and just over 8 billion people in the world total, if 10% of the US population all decided to buy a single Bitcoin, they couldn't. Or another way to think about this is that only about 0.25% of the total world population could get 1 Bitcoin if this was evenly distributed. But the reality is this number is actually much lower because several million Bitcoin have been lost forever from the earlier supply of Bitcoin. And that's because people either lost their seed phrase or access to the wallet and hard drives where the Bitcoin was stored. The bottom line here is this: the price of Bitcoin will grow exponentially in the coming years. And I personally believe that not owning any Bitcoin or having exposure to it will increasingly become a liability to investors. Now, I realize that not everybody has $40,000 to shell out and buy a Bitcoin. So what other options do you have to gain exposure to Bitcoin besides buying Bitcoin outright or buying into these ETFs? Bitcoin mining companies like Mara and Riot are the answer. Those two are the top 2 industry leaders when it comes to mining. And mining simply refers to the process of solving complex cryptographic equations to unlock Bitcoin rewards. 19 million of the total supply has already been mined. And because the block reward is halved every 4 years, obtaining a Bitcoin will become increasingly and excessively more difficult. The reason I'm choosing Mara and Riot as my personal preferred investment vehicle besides Bitcoin is because they are currently the industry leaders, as I said, and are instrumental to supplying Bitcoin. The best part is that they hold Bitcoin on their balance sheet, so their valuation is directly correlated to Bitcoin, right? But besides that, here's why you may want to consider them for yourself. The entry point is much lower, and for this reason, they consistently outperform Bitcoin returns in each of the most recent cycles. Case in point, in the last cycle, Bitcoin went from $5,000 to a peak of around $69,000. That's roughly 13 times the returns. Riot went from around $1.27 to a peak of $79.50. That's about 62 times the returns. Now, Mara went from around 60 cents to a peak of $83.45. That's around 139 times the returns. Those are astronomical numbers by any measure. Hopefully you get my point here. The last thing I will say is this. Like Bitcoin, these stocks have a lot of volatility built into them, and performance in the last cycle doesn't guarantee that you'll see the same level of returns in this cycle. That said, personally, I can't imagine a world in which the core suppliers of Bitcoin do not accrue significantly in value as Bitcoin itself goes on to set new all-time highs as it continues to gain in popularity as an investment vehicle and a financial network used worldwide. And so the last thing I will leave you with is this chart. The chart you're looking at here shows the price of gold pre and post gold ETF approval. You see that giant spike there from 2004 to 2010? Yeah, exactly. That's my point. We're at the start of that spike for Bitcoin. Don't say that I didn't warn you. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.